What is going on, everybody? In this video, you guys already saw the title. We are going to talk about Fed rates and how to either benefit off of them cutting or what can happen in the future and how to better prepare for it and what are the two scenarios. So with that being said, let's go ahead and jump right into this video and get into it.
I've been getting dirty money.
Okay guys, so there are two case scenarios here. Really, only two. Either they can keep the rate for mortgages and everything else, the Fed rate, where it's at right now, where they've raised it up to. Or they could cut it. Well, if there's also a third option, they could raise it, but I think that falls more into category one, where it's at right now. If they do raise it a little, they could go a few basis points higher. I'm not saying that they can't, but the main key here, though, is how to prepare yourself for it and how to position yourself. So in this case, you have to make a determination on what the Fed you think the Fed's going to do. If you don't really care and you don't really know, you can do it. Kind of what I do is I continue to sell my puts. I'm a little bit further out of the money now, but this thing right here, this CNBC article, somebody actually sent it to me, and they were kind of panicked of what to do, and they were asking kind of what I'm doing with my portfolio right now and all my portfolios, because I have a couple different portfolios, whether it's just stocks, retirements, covered calls, just premium portfolios. I have those, or a little bit more risky portfolios. So with that being said, the one thing everybody needs to be ready for is if they do cut these rates, guys. If they do cut these rates, the market is going to go nuts. I just want to show the SPX right now, which is also SPY, or the S&P 500. This is the index. Guys, we are near all-time highs right now. We're not quite there. Obviously, up here is where it's at. We're still a little bit of ways, but we are on our way at this point. Now, again, we're at this point right here where it's a little bit of a troublesome. That could break pretty easily. But you guys have to be looking for the long term here, and why I think everybody should be hoping that rates aren't going to fall if you are not just piled into the market. Because if they cut rates from whatever it's at, 6-7% right now, and it goes back down to a 5 or like a 4.5, anything like that, which I don't think that they will go that far down. But if they do, to get money to circulate again and people to spend money again, guys, if you think you can't afford a house now, you won't be able to afford a house at all in the future. Like, if you can't afford, the average house is like $400,000, $500,000 right now in America. If you can't afford that now, there's no way you will be able to afford that in the future if they cut these rates. Now, we can go back here and look at the other case scenario. Now, this man's got all the power right now. We don't know if he's going to stay in power or not with the Fed. This is Jerome Powell. But now, if they keep rates where they are at, you may see a little bit of a market decline. Now, here is my best case scenario. They bring the market down, and I just make a buku of money off of all my assets that I've accrued, and I will be perfectly fine. If I'm me, I'm hoping that the market, that they do cut the rates, because I'm going to make a huge amount of money, a gigantic amount of money. You guys hear the phrase all the time, the rich get richer? Well, that's going to happen dramatically if this happens. Now, let's go the opposite side. If they don't cut rates down to that, which I don't think they're going to cut the rate down to that, at least not for another year or so, I'm going to continue doing the exact same strategies that I've been doing, which is selling calls on my actual stock, selling puts, stocks that I want to own, not on risky assets. I think that would be a mistake because anything can happen. You have all these crashes, 08, 2020, all those things. Things can happen. You can prepare yourself. But anyways, those are the two case scenarios that you have for the market. So you have to make a decision. Do you think that the Fed is going to... You guys got to remember, unemployment is still great right now. Like, we have very, very low unemployment. So the market, they really have no reason to cut rates until that number changes at least a little bit, I would think. Now, again, these are my personal opinions. I am not a financial advisor whatsoever. But look at the facts. If interest rates drop, you your brother, your sister, your mother, your dad, your uncle, your aunts, your cousins, they're all going to be trying to buy a house. That means if you're living in a house right now, it's going to go up exponentially in value. And a lot of people won't even be able to actually get out of their house because they won't be able to afford to buy a new one if they're in that upper class. Now, the other option is you could sell that house for an exponential more amount of money and then go and buy a smaller house and basically have no mortgage. Now, that I do think is a great idea, and I have talked to a couple of people that are kind of looking at it that way. Again, this is all my personal opinion here. Do I think that they need to cut these rates? No. Do I think that they're going to? No. So what this really looks at for you, you have to make a decision. I'm not saying today, not tomorrow, but you have to make a decision with your money. Do you think that they're going to cut rates? Do you think they're going to keep them the same? Or do you think that they're going to raise them? Really, 2 of the 3 options become the same thing. So you really only have 2 options, like I stated at the very beginning of this video. You have to make the decision. Me, I'm not changing really anything right now. I'm buying a few more utility stocks that I've owned in the past, such as Southern Company, Duke Energy, things like that, just to balance out my portfolio. But we've been in those for a little while now, and I can do a review on those and why I'm in those. If you guys want, just comment below, and I always read all my comments. But the Fed, Chairman Powell, has all of the power right now when it comes down to this, whether we like his decisions or not on this. But again, they look at the overall market. This man did not get to where he's at by being dumb. You guys have to remember that. So, when it comes down to these, again, we can look at the key points here. It would be premature to conclude with confidence that we have achieved a successful restrictive stance or to speculate when policy might ease. They're not looking to ease the policy right now. If anything, they may make it go up a little bit. Now, with that case being said, if they do continue to raise the rate, I do think it is the smart thing overall for our economy in the long term. But I do also think that you are going to see a little bit of pain in the SPX, SPY, the indexes in general. The big, what do they call them, like the Magnificent 7 or whatever, Magnificent 6, whatever the case may be, of Apple, Google, those huge companies. Those are the companies that, yeah, you do have to be, a lot of people, if you are in the S&P 500, you need to worry about those companies. I do agree 110% on that. But do I think that we're going to have another, where's it even at? Yeah. Do I think we're going to have another 2020 right here? No, I don't think that that's going to happen. I do see that we could have a little bit more like this right here back in 2018, where the market did go down, and it did go down quite a bit here, but it didn't just fall off the face of the earth. I think you could just have a little bit of a stagnant down for the year, and then our economy will recover if we do the right things. Again, as long as Powell doesn't give in to all the pressure that he's under, and I'm sure he's under pressure by a lot of people, then we will be okay. Guys, go look at the Fed fund rates. I wonder if we can actually Fed fund rate. Effective. Oh. Yeah, it's going to give you a bunch of these. So there's a dot plot on these as well. And if you guys don't know what I'm talking about when it comes down to these, you guys can look at these right here. Investopedia is a great rule or a great tool to use. But use all your tools here. I do think that it's smart to continue to do exactly what we've been doing over the past year, or my strategy, and that's why I continue to stick to it right now, is I'm still selling the premium. I'm still buying equities. But with the equities that I'm buying are having the sustainability. They have their cash heavy. They're smart about it. They can pay their dividends easily, very, very easily, guys. You guys remember that's a big thing, being able to pay your dividends. They have a long track record of paying dividends, and they're able to move quickly. Apple's very flush. I don't own any Apple right now, but Apple, if you own the S&P 500, you own Apple. If you own the S&P 500, you own Google, guys. Those are just absolute staples of the S&P 500. With that being said, guys, take this how you want, but you have to make a decision on what you think the Fed's going to do. Thank you guys all for watching, and I will see you guys in the next video.